What's going on YouTube? It's your boy Chris, aka The Capital Connect, and in today's video I'm going to be going over the best confirmations that you can use for your supply and demand setups. In my opinion, of course, make sure you stay plugged in until the end because I have a bonus tip for when you find yourself in a situation where you have two of the exact same setups happening at the exact same time on different pairs, and you're trying to figure out which one should I take and which one should I pass on. So stay plugged in, man. This is going to be a good one. So let's jump right into the video, man. The first thing we're going to be looking at is going to be moving averages. Now, I got to give credit where credit is due. Shout out to Bullish Exchange. These are actually his moving averages. I learned these from him. I actually learned 90% of what I know about supply and demand from Bullish Exchange. So if you're looking for another supply and demand trader that's super cold, go check out Bullish Exchange, man. That man is the truth. Now let's get right into the video, man. Moving averages, right? The three you're going to want to have are going to be the 13 EMA, the 200 EMA, and the 50 SMA. Okay, so for me, the 200 EMA is the red line, right? The 50 SMA is the yellow line, and then the 13 EMA is the blue line. Now, when it comes to your with the trend setups, right, you're gonna want to have the 200 EMA in your favor. What do I mean by that? If it's a supply, I want the 200 EMA above my zone. If it's a demand, I want the 200 EMA below my zone, right? Now, in a perfect world, all of those EMAs would be lined up, right? Like I would have the 200 EMA above my zone, I would have the 50 SMA above my zone, and I would have 13 EMA hugging my zone, right? But of course, we don't live in a perfect world. So when it comes to entering your trades, right? When it comes to choosing your setups, right? When it comes to your with the trend setups, you want at least the 200 EMA to be in your favor. So if we look at this example from earlier this morning in London session, right? I don't even want to talk about this setup because I mismanaged this setup and I actually did not catch this whole move. I only made about $10 because I moved my stop to break even a little bit too early, man. So that's tough, but let's get into the setup. Right, as we can see, we have a very clear supply. Right, we got a gap attached to our zone, and we got a break of structure. Right, we broke these lows here, so this is a high probability supply. Where is the 200? The 200 is above our zone, so this is exactly what we want to see when it comes to our supply setups. We want the 200 to be above our zone, and as we can see, man, price came back into our zone, right, sold off beautifully. Like, let me just hurry up and get off of this because I don't even want to see this anymore, man. I did not catch this whole move at all, and I'm tight about that. But this is just a bearish example of what you want to see when it comes to your 200 EMA in confluence with your supply zone. Now let's go ahead and get into a bullish example. So for our bullish example, we got NAS 100. As we can see, this is a very beautiful demand setup, gap attached to our zone, and we broke these highs over here to the left. So this is a valid demand, and look where the 200 is in relation to our zone, right? It is underneath our zone, right? I said for our demands, we want it to be below. For our supplies, we want it to be above. So as we can see here, we got a beautiful demand. Some of you guys may be wondering, why do I have both of these candles marked up? Why don't I just have this one marked up? And the reasoning for it is, right, sometimes when you're on the 5-minute chart, you can get left behind by trying to be a little too cute with your zone, right? So if I would have left it here, the stop loss would have been about 11 points. That is a super small stop loss, right? But if I put it here, right, the gap is still attached to that zone. So my stop loss would have went up to 18 points. Now, for those of us who've been trading, you cannot tell me that you wouldn't like an 18-point stop on every single NAS entry you got, bro. You can't tell me that, right? An 18-point stop on NAS is actually beautiful, especially for the reward that you can get. So as we can see, man, the 200 EMA is in confluence with this demand, and we can just see this thing took off. The rest was history. So the next example I want to show you guys is how you can actually use the 50 SMA to go counter trend. Now, let me say this right off the bat, right? This is more risky, number one. And number two, this doesn't happen often. So don't be looking to catch this every day or every week. I just want to show you guys a counter trend example and that it can be done. So as we can see here, right, the market, well, this is US 30, and the market was just selling off. It was tanking, right? But then we can finally see it start to push up, right? And then we get a demand here, right, with a break of structure, right? We broke this high. Now, I know I said earlier you want the 200 to be in confluence with you, right? You want it to be underneath your demand zone. But in this case, since we know we just had a big sell-off, right, and we know that the market has to correct itself, right? If I got the 50 with me, I'm gonna take it. So we got the 50 SMA with us. We could have took our position here, and as we can see, the rest was history. You could have got out at the 200 EMA, or whatever your trade management style is. But as you can see, man, you could have caught at least 65 points on that, and you can't tell me that you wouldn't like a 65 point setup. So in continuation with our counter trend setups, I wanted to show you guys an example of how you can catch a counter trend play regardless of the moving averages. As y'all can see, I took them off the screen because they're irrelevant. We're going to be looking at pure price action. Okay, so as we can see, we have been in a downtrend for an extended period of time, right? We broke this low, broke this low, broke this low, right? Broke this low. We've been in a downtrend, right? And then we finally broke this low. But look at what happens next, right? We broke that low, but then we immediately push back up and then break this high. Okay, that is what we call a market structure shift, right? Now, of course, this is on a lower time frame, so a market structure shift on a lower time frame isn't always reliable, but this is another way you can catch a counter trend play. So we can see that we've been going in a downtrend, right? Then all of a sudden we break a high. That's a market structure shift. And what did we leave behind after we broke that low? After we swept that liquidity, right? We left behind a demand. So we could have very easily took our position from here, right? And the rest would have been history after this. Now, I will say this, just like with all counter trend setups, right? They are very, very, very risky, because you're essentially just trying to, essentially what you're saying is, when it comes to a counter trend setup, is that this is the bottom, right? Or this is the top. So when it comes to counter trend setups, man, make sure you're very, very, very careful. In my opinion, especially on something like the NASDAQ, US 30, SPX, whatever, right? If I can get a 12-point stop, right? A super tight stop loss where the reward is something as big as this, right? Where you can literally catch an entirely new trend at the bottom, like, it's worth it in my opinion. Now, some people may say it's not worth it. In my opinion, it's worth it, right? Do what you will with that information, okay? So market structure shift, man. That was the reason why you would have gotten into this trade. This happened during NFP week. I went over this actually in my London session video, where I was talking about, how London session be cooking up. So this is another way you can kind of get in on the market in counter trend. And for y'all wondering why I'm going over counter trend a little bit more extensively, is because I feel like it's easy for people to catch a trade with the trend, right? A lot of people want to know, okay, how do I catch a trade counter trend? So that's why I'm going over these setups. So here is another counter trend setup on SPX, right? As we can see, huge sell-off, right? The market has to mirror itself. The market is going to fill that in. So as we can see, huge sell-off, right? We broke this low, took out liquidity, right? Immediately pushed back up and took out this high. All you had to do was mark that zone out, wait for it to come back into your zone. Boom, counter trend setup. You obviously won on that. Won big, by the way. Like, y'all see what I'm saying, bro? Counter trend can really, like, if you catch the right counter trend play, man, it can really exponentially grow your account, because you're at the bottom or the top, of a new trend. So just understand that counter trend is more risky, right? But the reward is there. And especially when you're on a 5-minute time frame, we only have a 6-point stop on SPX, or a 12-point stop on NAS, right? Or a 15-point stop on US 30, right? I feel like the reward outweighs the risk, in my opinion. So the last thing I want to go over is how you can filter out setups that are happening at the exact same time, and you're trying to figure out which one to take and which one to kind of pass on. So have you ever found yourself in a situation where you had let's say a demand on AU and a demand on GU, and you're trying to figure out, man, which one should I take? Which one is going to be the winner? Well, one thing that can help you with that is adding GBP AUD to your watch list, right? And the reason for it is that, let's say we got demands, like I said, on GU and AU, right? Well, how do I choose which one? Let me go to GBP AUD, right? I'm gonna see, are we in an uptrend or a downtrend? An uptrend means that the Great British Pound is stronger than the Australian dollar. A downtrend means that the Australian dollar is stronger than the Great British Pound. So let's say I got a demand on AU and a demand on GU, but I see we're in an uptrend on GBP AUD. That means I'm going to take GU's demand. Why? Because GU is stronger. Well, because the Great British Pound is stronger than the Australian dollar. Does that make sense? Right? And the flip side is true as well. If I got a supply on GU and a supply on AU, which one am I going to take? Well, I'm going to take whichever one is weaker. So if I see I'm on an uptrend on GBP AUD, right, I'm going to take the Australian dollar because it's weaker than the Great British Pound. I hope this is making sense. I hope I'm not losing you, right? And you can also use this when it comes to Euro GBP as well. The same concept applies. If I got a demand on GU and a demand on EU happening at the exact same time, which one am I going to take? Well, I'm going to see, are we in an uptrend or a downtrend on Euro GBP? Okay, so if I'm in an uptrend on Euro GBP, that means the Euro is stronger than the Great British Pound, which means I'm going to take EU's demand over GU's demand. And if it's in a downtrend, I'm going to take GU's demand over EU's demand. All right, so I hope this makes sense. And this is low-key a bonus because I've never seen anyone talk about this. I'm not saying that I'm the one that came up with it. I'm not saying that no one's ever talked about it. I'm just saying that I haven't seen in my experience someone talking about this. So I hope this little bonus tip helps you guys out, man. I hope this whole video helps you guys out when it comes to filtering out your supply and demand setups. These are things that I use on a daily basis in order to help me choose the best setups to take each and every day. That's all I got for this video, man. As always, if you have questions, make sure you comment them down below. I am pretty good about responding to every single comment. So if you got questions, comment down below. Make sure you check out some of my other videos. That's all I got for this one, though. I'm gone.